Hello everyone, this is PR talking to you on September 19th on Sunday, before the markets open in the US. And there are a couple of things that I want to show you that happened on Friday, but basically just one of them is really, really important, and it's not the one that you think, probably. All right, so let's take a look at the charts. Now, the thing that happened that you probably think is very important is that the GDX ETF declined to new yearly lows. Okay, so the breakdown below the previous lows over here and over here has been confirmed in terms of both intraday prices and in terms of the daily and weekly closing prices. So that was a major event. The same thing happened in silver. Okay, the white metal also closed at new yearly lows. We didn't see a new low in intraday terms, but daily closing prices are more important than what happens on an intraday basis. So what happened on Friday was very bearish. But these two events are not that important. What is important is what I've been writing about so many times before, and what we see clearly this time. Okay, it's the completion of the very bearish and broad head and shoulders pattern in the HUY index. The head and shoulders pattern has been forming for well over a year, and right now we saw a verification of the move. Prices tried to rally back up and they failed, which means that they really do want to decline, and the history is very likely to repeat itself. And what does the history tell us right now? Well, back in 2013, gold stocks declined really significantly after completing their head and shoulders pattern. In 2008, gold stocks declined profoundly after completing their head and shoulders pattern. And in the year 2000, gold stocks also declined really heavily after completing their head and shoulders pattern. So in all three previous cases, we saw major declines. I don't mean declines like a couple of dollars in the GDX ETF, okay? So the target for $28 is just a temporary one. What this means is that the really big moves lower are likely starting right now. So I copied the previous declines to the current situation, and you can see them as dashed lines, all right? The green dashed line represents the 2013 decline, the red dashed line represents the 2008 decline, and the purple one represents the 2000 decline. And based on those moves, we have a target, all right, if the history rhymes, we have a target between 100 and 150. So this means that gold stocks are not only possible that gold stocks will move back to their 2020 lows. It's quite possible that they will decline all the way down to their 2016 lows. So again, what's remarkable about the situation right now is that the similarity is so clear, and yet barely anyone is talking about it. That's the elephant in the room that's, so obvious that you don't really notice it. Most people will probably focus on the day-to-day moves. Oh yeah, GDX declined. Oh yeah, silver declined. Maybe it will come back up or come back down, or some zigzag pattern over here, the verification of the breakdown. Right. And it might as well happen, right? That's all probable. But it doesn't mean that it's the key thing to keep in mind right now. The key thing to keep in mind right now is, first of all, the major similarity in gold to what happened in 2013. And second, the broad head and shoulders pattern in the AGY index. These are two key factors that are pointing to much lower precious metals prices across the precious metals sector. So, summing up, the outlook is definitely bearish for the following months on the precious metals sector. But it's relatively unclear as far as the next few days are concerned. We could see back and forth movement in the GDX and silver and gold, who knows. But over the next several weeks and months, the prices are likely headed much lower. All right, this ends today's market commentary. And as I have been discussing on my previous videos, I'm going to talk about some non-market things that I found interesting in some books or podcasts that I've been listening to. And for today, I have something from the book by Michael E. Gerber, E-Myth Revisited. Highly recommend reading this book. The interesting thing is right there in the title, E-Myth. E stands for entrepreneurship. And the myth is that someone who is great at doing something will be great at leading business that does exactly that. All right, so if you've been considering some career moves, maybe starting your own business because you're great at doing something, be sure to take into account the business aspects of what you're about to do. If not, if that's not the position that you're in, maybe it will be a useful question to ask someone that you know that might be considering this. By no means it means that I'm discouraging people from starting their own businesses. Quite the opposite. I just want to make sure that this question is asked and people have time to think about it. And also, I definitely recommend reading this book before starting any business because, well, it's a quite eye-opener for many business-related things. All right, so thank you for watching, and naturally, I will upload the full version of the gold and silver trading alert on Monday. It will include probably over 40 different charts, so I highly recommend that you read it, and I hope you enjoy it. Okay, I also encourage you to subscribe to the YouTube channel because there will be more videos coming on it in the future. And finally, please note that everything that I said and what I'm about to say in the following videos is just my opinion. It's not an investment advice. It's definitely not an individual investment advice targeted at anyone specifically. It's just my opinion. Investing is risky. I don't guarantee any rate of performance, any market behavior, and neither does anyone else in the business, definitely. Be sure to contact a certified investment advisor before taking any investment actions. Right. Having said that, have a great weekend and have a great week as well. Thank you.